Hello and welcome to Ticker Tapes. It's Friday, which means that we are looking at the world of meme stocks. GameStop reported Q2 earnings last week. The video game retailer recorded a smaller than expected loss, with EPS coming in at minus 36 cents per share compared to estimates for a 38-cent loss. However, Q2 revenues fell well short of Wall Street expectations at $1.13 billion. Analysts had been looking for $1.27 billion or higher. Broker Wedbush wrote that the digital transformation of GameStop had missed the mark so far, which leaves the business reliant on declining core business. Hardware and accessories revenue fell by 2.2% year over year and by 4.2% when compared to the prior quarter, whilst software revenues dropped by 20.2% versus last year. However, there was a 21% improvement when revenue growth was measured on a quarterly basis. Wedbush highlighted the fact that GameStop had posted 6 consecutive quarters of cash burn and that free cash flow in the last quarter was negative to the tune of $124 million. On a more positive note, GameStop management believe that they will have a greater supply of high-end consoles available as we approach the all-important holiday shopping season, and they pointed to a new tie-up with leading crypto exchange FTX US. The two companies will collaborate on new e-commerce and online marketing initiatives, with GameStop carrying FTX gift cards in select stores as the exchange's preferred retail partner in the U.S. Overall, however, the broker's tone was negative, and it cut its price target on GameStop to $6 from $7.50, whilst remaining an underperform rating. One of AMC Entertainment's major rivals, Cineworld, has put its U.S. operations into Chapter 11 bankruptcy, under which the company will receive protection from creditors while it tries to reorganize its affairs. Cineworld is the second largest movie theater operator on a global basis, and it has 751 active locations in the U.S. A statement from the business said that it hoped to emerge from bankruptcy proceedings in the first quarter of 2023, and it has $1.94 billion in financing from existing lenders to help it through. However, existing stockholders in the company whose shares are listed in London are likely to be highly diluted in the restructuring process. Cineworld shares are already down by almost 86% over the year to date, whilst AMC's share price has dropped by 45% in that time frame and traded down 8% last week. Over the last quarter, the two stocks have moved in sync, as we can see in this chart, and AMC stockholders must be hoping that the same fate doesn't await them. U.S. box office revenues have been helped by a series of blockbuster releases this year, led by Top Gun: Maverick, which has taken $701 million. In fact, there have been 13 films this year that have grossed more than $100 million each. However, even that level of consumer spending hasn't been enough to save Cineworld US.